Hi, this is Andy Filipiuk in Toronto for the week of May the 27th. It looks like once again we're at a major turning point in the financial markets. Last December, we saw an amazing 180-degree turn by policymakers as the global economy wasn't as strong as we thought. Well, here we are 5 months later, and we've been on pause. But now the financial markets are telling us something else is going to happen. Despite the fact that stocks are only about 4 or 5% below their all-time high and that the job numbers and the economy is holding up very well in the US, interest rates are dropping like a stone. So much so that the yield curve has become much greater inverted than it was, say, 2 or 3 months ago when I first mentioned it. So even though economic numbers appear to be okay, the bond market is screaming the opposite. And this is where it gets really interesting. The policymakers are ultimately going to have to do what the bond market's saying. If the 2-year Treasury in the US is at 2.07%, they can't leave the Fed funds rate at 2.5%. It can't happen. So it looks like we're going to be set up for another change in policy. It's going to be very interesting to see how they describe this, because this is not going the way they want. And for investors, this is crucial to understand. When a trend turns, it can be very ugly. Always remember, when the first rate cuts start from a central bank, that's where most of the pain occurs, in the early stages of the rate cuts. So here we are again. Watch out below. But with our permanent portfolio, I'm very happy that we've got the diversification necessary and we don't have to predict which way one market's going or the other. Thanks for watching.